Hi everyone. This is a quick video about Banknifty trading, which we have finalized after thorough back test and live test, and then over a period of last 1 month, we shared it for 10 beta trader, and they have reported that this trading strategy is working very good. In this video, I will give you a brief about all those things, how you will trade, which this indicator all about, and what big problem trading it solve. It will be a very short video, so take a cup of coffee or tea, whatever you like, and enjoy the learning with me today. The main point, the lot. I will give you the details rule of this particular trading strategy. I have a written SOP. I will explain that. I will show you how it's working. Our main focus of all the research in our research lab is to find a edge over this axis, the x-axis. Now, if you notice any kind of technical indicator, they are all depend on y-axis, the price, and hardly there is any indicator, I believe, that analyze and try to find any pattern on time. Almost everybody focus is to find the pattern in price, but our focus is always to find the pattern in time, and we find that if I by the way, I am in Bank Nifty future chart, and if I transfer it into 30 minutes, what we find is that the 10:30 to 11, that means the 10:30 candle in a 30-minute chart ended at 11, and we find the 11 a.m. is a most vital point or the balancing point of the day. Trend either continue or reverse. The decisions point or the of the point from where the market behavior may shift, or the or the what I can how I can explain, or whether the market will um, gain the momentum or not. The 11 a.m. time frame is extremely crucial, as designed how we can be benefited from this very important point of the day, that is 11 a.m. The indicator is invite only, so if you have the access of the indicator, then you have to go to the invite only section, and the indicator, we name it the Bank Nifty Breakout 10:30 effect. 10:30 means the candle of the 10:30 in a 30-minute chart, which ends at 11. Plotting appears on 10:30 chart. You can see that eliminate the requirement of analyzing anything. You just simply react, not to analyze, and you can see that you can actually, once you have the indicator, the signal appears on the chart pretty consistently, right? And can see every day 10:30 a signal appears. Now I will explain the type of signals and how we can play with them. Now the first signal type is always the buy and sell. you can understand this is the most common signal, a long or a short, right? Now here three type of signal you can get. One is a buy signal, one is a sell signal, or a breakout signal, or breakout R signal. Now let's see what to do if a buy appears. It's clearly mentioned if a buy appears, wait for a subsequent red candle to form and place the stop loss trigger into order to buy with limit price the red candle high. So the idea here is that if I got a buy signal or a long signal here, then I will wait first. I will not jump and I will wait for a red candle to form, and I will place a buy order above the high of the red candle. All right. And once the trade got executed, for example, in this day the trade got executed here, the where will be the stop loss point? The stop loss point will be the stop loss is always placed at signal candle low or high based on buy sell, and even in case of breakout or breakout R or any new swing high or low until execution. That means the first rule is to let the candle in which the trade got executed to complete. I am specially fine on Monday's case where the trade got executed and this low has been developed. The order management require that you have to wait for the current candle in which the signal, the trade got executed to close before you place the stop loss, right? You can see the long trade got executed here. Let the candle close. Now, if you are not comfortable with waiting for at least one candle to close, you can place simply a rough stop losses of 100 points. That can be possible. Or you can place a stop loss point one candle. It is always possible. What to do next? Next, exit 50% is at 325, and if you see at 325 the trade is in profit, ideally you should hold the remaining 50% and you should exit it. It become some BTST sort of things and you will exit next day. In future, whether you trade in intraday or you hold the trade overnight, the margin requirement is same. But here, one point is that you have to always trade with normal, not intraday. Be normal, not intraday. Otherwise, you will not able to hold. We have observed that a profitable trade has a tendency to open positive next day. If the profit is greater than 50 point, which is mentioned here, exit 50% at 325 if the profit is greater than 50 point, and remaining 50 tomorrow if the profit is less than 50 point, then you can, or it is closing at loss, then obviously you will exit the 100 point. Most of the time your stop loss will be at the candle's low. For example, in this short trade, as you can understand, if you have to trade short, then you have to wait for a green candle to appear. For long, you have to wait for a red candle to appear. For example, in this trade, we entered in this candle high. We waited for this candle. This is a rare scenario where a outside candle appears, and that's the reason it is safe to at least wait the candle to close before you move the stop loss. and you exited the trade here. So our entry is around 56,880 and get around 100 odds point here. You exited one lot at 100 point and try to exit next lot next day opening. For example, in this short case, because it's a short trade, you have to wait for a green candle to form and you will place the sell order below this candle low. You can see the trade got executed here. Ideally, your stop loss should have been signal candle high, but you can see there is a new swing high, so stop loss should be here, and entry is around 57,020. At the close, you was checking that you got around 90 odds point. So it's greater than 50, so 50% you exited here, and you are trying to exit the remaining 50% here. Now here is a short trade, and you can understand that once you have a short trade, you need a green candle to form, and green candle has formed here, and you place the order here. The order did not executed, and you can see subsequently a new green candle appears here and a new green candle appears here. So question is that if the order didn't executed and I find a new green candle, what I will do? The rule here is that should be under NT rule. Let me see. You get another green candle with higher low, then modify the order at the latest green candle low. This applies here. So our entry will be below this candle low, and you can see the entry happens at the last candle. And definitely we are not getting if you see 56,419 and 56 368 17 19 and 70, it's just about 48 point, so it's not 50 point, so you will exit the 100%. If it is greater than 50, then you will exit 50% here and you will try to exit the rest next day. This is the idea. If I let me show the trade here. It is a break. If you see today, a breakout R appears. Now, what is the breakout R and what is the breakout? So let me define it. If I got any clean breakout, in recent terms, all are mostly breakout trade. I'm not getting anything which is uh, simply breakout. Okay, the breakout and breakout are very similar. Nothing extra analysis is required. Simply, if there is a breakout R on stop loss trigger, you will reverse the trade. That stands for R for reverse. You can reverse. In case of breakout or breakout R, you will immediately trade on breakout of the high and low of this if breakout R appears. Your trade, short side trade got executed. You place the stop loss above this candle. If the market moves up and the stop loss has taken, and you have a signal that it is a big, you can RR stand for reversal, then you can trade the reversal. But today the trade goes in our direction. It is a more than 50 points, so 50% should exit and 50% we will exit tomorrow. Here is the same breakout trade. From short side we capture the rally. Now here you can see a breakout trade that move in our favor, and then our stop taken in this candle. We reverse the trade and we exited the trade. In case of breakout, if you want, you can hold the trade next day if the profit is greater than 50. Nice sort of short trade here, very plain short trade. Now the question is that here a short trade appears, the low has been taken out. Should we enter into this trade? The answer is no, because once the short trade appears, by the way, here we didn't get any educations and that. Okay, a short trade appears. Once a short trade appears, we need a green candle to form before we can enter the trade, right? If we have a long trade, a red candle need to be appears. This is a breakout or trade where the trade got initially trigger from the short side, reverse. We got a good point here. Now, if we have to trade this long trade, then our entry will be above this candle, this red candle, above the high of the red candle. We didn't enter this long trade. You know why? Because we the red candle from here and the market didn't go above that, and we don't have any entry. Is the short trade executed? Is the short trade not executed because after the short happened, the green candle appears here, and the low should have been the entry, and you can see subsequent green candle low didn't trigger, right? So no entry here. This short trade got executed up once the low of this green candle breaks. This is a breakout trade. This is a breakout trade, and the short initially executed and the trade got profitable. This long trade entered here, around here, over more than 50-point profit was there. It's a 30-minute chart, so this gap is quite heavy. For an example, a entry here at 55,970 is 56,160, 170. So it's around 200 points off. And next day, market give a spike. I don't believe that anyone able to entered here, exited here. Sorry. So roughly around here, they should exit. Breakout art trade. Breakout happened from the short side. Nice rally. And next day, that opening should cover up. This is a very good setup, a short setup. Immediately we got a green candle. We have to trade below the green candle low. The trade got executed more than 50-point profit. So we hold one lot, next day gap down and capture a nice rally. This long trade didn't execute it, as you can understand from this chart. It is a breakout trade. Okay, now we got a breakout. So because it's a breakout, not breakout are universal, right? We got around say entry was around 56,083, 56,080, and 55,840, more than 200 point. Next also we got a chance to exit here. This is a breakout art trade. That means you can see here the trade actually got executed from the long side. Nice rally and then follow through. Now, where this long should have been, a entry should have been triggered. The long, after the long, we waited for a red candle. What is the color of the candle? The signal appear doesn't matter. Here after the long, we have to wait for a red candle, and the first red candle appears here. And because the next red candle high is lower than this, we place the entry here, and then we got another red candle. So the entry should have been around 55, 826, 30. And next day, and it's a nice rally from here, almost 200-point odds rally, and 50% we exited. Next day 50% not give us very chance, even if we cut it around 56. If we start tracking the market at the dot open, then probably we will manage the trade got executed early. The short trade not executed, right? So this is sort of about all these things, and per lot, monthly 1,000 point is what we are targeting.